Yeah, folks, the story of the hour or the story of the week is Trump's tariffs and the implications thereof. Yeah, I just want to react to some reactions from leading media outlets on this issue. I saw a video that was posted by a friend on Facebook about Trump's tariffs coming from The Economist. And don't let the name, The Economist, mislead you. This paper is not being run by economists or have sound economic thoughts. It's run by journalists who often have journalism degrees, political science degrees, and mostly people having degrees that have nothing to do with economics and who have no clue about the economic theories and the practical realities of economists. And it's a globalist paper. I must put that as well. And so they have a vested interest in opposing Donald Trump's view. This is not to say Guti they are wrong. This is just to say Guti you must look at it through a prism of saying that they are biased. And The Economist has been biased for a very long time. There was a time when I used to have The Economist hold it in highest esteem until I realized that a lot of these financial papers of the West are basically leftist organizations, which is fine. But let's just hear what they are saying with regards to this issue of Trump's policies and a possible recession. Okay, let's listen.
More than $11 trillion has been wiped off the value of American stocks since its peak in February. And global markets have tanked too. Analysts have been saying that a global recession has been getting more likely. JP Morgan says the chance of one is now 60%
Could President Trump's
this
tariffs
year.
cause a global
Even if
recession?
Trump were to U-turn
Markets
now,
have
he's plummeted. More than $11 trillion.
Sorry, folks. I might have made a mistake of playing two videos at once. My apologies. Let's start from scratch.
Recession. Markets have plummeted. More than $11 trillion has been wiped off the value of American stocks since its peak in February. And global markets have tanked too. Analysts have been saying that a global recession has been getting more likely. JP Morgan says the chance of one is now 60% this year. Even if Trump were to U-turn now, he's already caused lasting damage to the global economy.
I want you to take note of that. These people. If Trump were to U-turn now, he has already caused irreparable damage to the global economy. Really? Guys, come on. Cut the bullshit. But okay.
Already caused lasting damage to the global economy this year.
Hear him again?
Even if Trump were to U-turn now, he's already caused lasting damage to the global economy. Here's why. It's more than just the headline share price moves that show the economy could be in trouble. The VIX, a measure of volatility, reached its fourth highest level on record. Oil prices, which track the global economic cycle, are also down. And defensive stocks, like food and utilities, which are less exposed to economic downturns, have been outperformed.
Okay, folks. Understand that everything that he's talking about here is stock market prices other than oil prices, because that's a separate and different indicator. One could say oil prices are also stock market prices because you can trade oil in the stock market, yes, but let's just consider stocks separately. The measure of volatility of stocks is also a measure of stocks. The issue of discussing defensive stocks versus more cyclical stocks, it's also a discussion of stocks. The only other measure that he's talking about here is oil, which we'll talk about later. But okay, I just wanted you to take note of that.
Forming cyclical stocks, like airlines and car makers, that rely on the economy being strong. The last time the gap was this big was at the start of the COVID lockdowns in 2020. And there's another problem. Usually, a downturn will be met by central banks cutting interest rates. But central banks are still worried about inflation. And this dilemma could be particularly acute in America, where tariffs will push up inflation this year.
it's not clear at this time what the appropriate path for monetary policy will be. And
By the way, we don't know that. We don't know that the tariffs are going to push up inflation. We don't know that. But the reason why, in the past, when the U.S. government, Donald Trump specifically, put on tariffs on the Chinese and on other countries in 2017, 2018, and there was no inflation in the U.S. So we don't know that. We don't know that. We need to wait for quarter numbers to see if there is inflation or not. So this idea that it's a guarantee that there's going to be inflation is just not true based on historical data that we have. What's true is that these tariffs are more widespread than what he had in the past. But that also still doesn't tell us conclusively that this is going to result in inflation. We need to wait and see. But okay, let's continue.
We're going to need to wait and see how this plays out.
It's still possible the tariffs could be stopped by the courts, by Congress, or by Mr. Trump himself. If so, then a recession probably can still be avoided. But even if there is a U-turn, the last few days will have done lasting damage to global trade.
No, bullshit.
That's because
No, bullshit. But okay.
businesses don't just need low tariffs, they need confidence that the rules of global trade will remain stable. A company building a factory doesn't just need to know that tariffs will be low today, but also in 5 and 10 years' time. A good example is China. When it joined the World Trade Organization in 2001, it did not get materially lower tariffs with America, but investors became confident that there would not be a trade war. This confidence boost had the same effect on US incomes as a massive 13 percentage point fall in tariffs. For all of America's trading relationships, Mr. Trump is now putting this confidence effect into reverse. What business would build a global supply chain when there's a risk that someone like Mr. Trump could pull the rug from beneath them? There is some good news. The global economy was in pretty good health before it got into this mess. America in particular was strong. And countries often abandon foolish economic policies when markets react badly to them. But in the meantime, Trump has recast America as an unreliable trading partner. It could take a generation to undo the damage.
Okay. Let's just cut the bullshit on a lot of these things. Recessions are not predicted by widespread losses in the stock market. No, they're not. And recessions are not even predicted by bad oil prices. No, they're not. Recessions are predicted by very specific indicators that actually measure the actual activity in the real economy, not what is happening on the stock market. But also, one thing that becomes more clear to me is that, which we all know, Guti, the stock market is price movements are controlled by very few individuals, because there are very few individuals and institutions who have enough capital to trade in the stock market. And so when these few individuals and few institutions, banks, asset managers, and very wealthy individuals who control more than, I would even say more than 80% of the capital that gets traded in the stock market, the actions of these very few people is actually what determines stock prices. It's not the fundamental underlying economic strength that determine the strength or lack thereof of the stock market. So you can't in any way use stock market prices as an indicator for anything, because all that it tells you is what are the opinions of these few elites who have made a lot of money through this so-called global free trade, which is not really free. So all of these people have a vested interest if global trade goes in a particular direction, because they control the capital, and therefore, even though their opinions don't measure what are the opinions of the people, just as how they were telling us that the UK economy is going to crash and burn beyond repair if a Brexit happens, and then it happened, and the UK economy is just fine. Because these people who are controlling capital in the UK, it's few individuals, it's few institutions, they control almost all of the capital. And therefore when they start moving their money from from certain stocks, it affects stock prices. So it's not really a true indication of what's happening in the actual economy. And we know that, for instance, recessions are predicted by issues like two consecutive negative growth numbers of GDP, like in terms of two consecutive quarter numbers. So if you have one quarter having negative growth and a second quarter having negative growth, then you can say you have a technical recession. But right now, we don't even have enough data to tell us that there is even negative growth for one quarter. We need to wait and see if that's going to happen. And it's very possible that it won't even happen. But they're already predicting the end of the world because these people, and it's not just the Economist. It's not just the Economist. It's Time magazine. It's Sky News. It's The Guardian. It's CNN. It's BBC, CBS. All of these people who have a vested interest in seeing the economy going in a particular direction. And I must say that the key indicators of recession are gross domestic product, a rising unemployment, a drop in consumer spending, and a tightening of credit markets. And none of these matrices have gone in the negative direction yet. Also, because we don't even have enough time to measure them going in the negative direction, we need to wait for at least one quarter to say, okay, there has been a negative direction in any of these indicators or matrices. The stock market price is the last thing for us to look at. The stock market price is looked at after we looked at these indicators. Also, stock market price has never been a measure of great economic strength because, for instance, in South Africa, people have been making lots of money in the stock market while the economy is not healthy, while there is 40% unemployment, 40 to 50% unemployment, while there is contraction a quarter after quarter after quarter, economy not going anywhere, people struggling, the lives of South Africans going downwards, but people are making a lot of money in the stock market. JSE reaching record highs. So you can't use that as a measure of anything. You need to look at actual indicators in the actual economy. And with that issue of crude market prices, I mean, right now the price of crude oil is what, $69.95 per barrel, which is $70 per barrel, which is low compared to what it was earlier at around about 114 beginning of the year. But the lowest 114 when? Let me just check. Oh, okay. The highest 114 or $115 per barrel in June 2022. But in as recently as September 2024, the stock market, the oil prices was $71 per barrel. So $69 or roundabout. These numbers might be not correct. I need to check a live price because it seems like I'm reading the wrong numbers here. Oh, okay. It's not $69 per barrel. It's actually $60, 60.3. It's a come on. If you're looking at it from the fact that the price was $71 at the beginning of the year, and now it's $60, this is really a red herring from this guy. It's a red herring because the lowest price that it hit maybe around April 2020 was $23 per barrel, which would have been justified because of the drastic reduced production in the economy and reduced consumption. But other than that, this is not even close to reaching the lowest numbers historically that are associated with the recession. So this is basically fear mongering because these people have a vested interest that global trade has to happen in a certain way that they agree with. And so, and there's really nothing in the historical indicators that have been used to predict recession that is telling us right now that these tariffs are causing or are going to cause a recession. March job numbers were 200,000 jobs were added in the U.S. economy. People are working, people are doing well, consumer confidence is high. There hasn't been any indication at all from the real economy, from real people, that tariffs have caused anything other than the fear mongering that is coming from the elites. And all of these elites in the media and these institutions who have a vested interest of saying that the global trade must happen in a particular way. And these people have extensive amount of influence in the global economy. That's definitely no doubt. But none of these people have and these elites, they tend to have this thing of they talk to each other, they tell each other what they want to hear, and then they convince themselves that what they are telling each other is the truth. No. As I said in the prior video, that we don't have enough data right now to predict one way or the other in terms of how these tariffs are going to affect the global economy and even how they're going to affect the American economy. We don't have the data right now. Let's wait for the data. We need at least one quarter. And even better, give us 2 quarters. When we get 2 quarters numbers with a trend going in a negative direction in terms of unemployment rate, in terms of consumer spending, in terms of credit markets, are banks lending money, are people applying for credits, for loans, in terms of gross domestic product, 2 negative figures from 2 quarters, then we can start talking about this is causing a recession. But even if we say, okay, not 2 quarters, it's just give me 1 quarter of negative growth. Give me 1 quarter of negative numbers for unemployment, 1 quarter of negative numbers in terms of consumer spending. Show us any evidence of contracting consumer spending and consumption. We have no evidence of that right now. So let's just cut the bullshit, shall we? And this person who was saying earlier that, or from the Economist, saying that even if Donald Trump were to course correct now, he's already caused irreparable damage. No, irreparable damage to the economy. That's just bullshit. That's bullshit. There's no way for him to know that. He hasn't presented any indicators to justify or to motivate for that. The only thing that he's relied on is the stock market. And the stock market doesn't tell us anything. It doesn't tell us anything. And so the level of fever pitch fear-mongering is actually quite insane. It's absolutely insane. And I'm not buying it. I'm not buying it. Yeah, and we know that a lot of these institutions, they are committed to the idea that Donald Trump doesn't know what he's doing. They are committed to the idea that he has to fail, because if he fails, then they will be justified in hating him. I'm just not buying it. I'm not buying it. Let's wait and see. Let's wait and see. There is no. You need to give me at least 3 economic indicators of the real economy in order for me to entertain any of that bullshit. Until then, well, that's just the words. That's all it is. And there's a lot of fear-mongering going around, and I'm just not buying it. Don't buy it either. Let me know what you think below. Do you think that, yeah. And if you're going to comment on this topic, can you give me thoughtful comments? Not regurgitating to me what CNN is saying and the virtues of free trade. Please don't even, because we know there's no free trade in the world. Give me thoughtful responses based on what Donald Trump has alleged against these nations. not in terms of non-issues or issues that are irrelevant and extraneous to the situation. And we can comment about the issue of where is this going to take the global economy. Fine, we can do that. But these sort of like generic CNN type kind of comments, I'm not interested in any of that stuff. Like, I mean, if you want CNN, watch CNN, bruh. Like, you're not gonna get that here. Yeah, but yeah, that's all there is. Sure. See you another time.